Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
Welcome to the Business Innovators Radio Podcast. I'm your host, Rick Brown. Joining us today is longtime Sacramento real estate finance leader and overall real estate expert, Sara Jung. Sara is the founding member of Legacy Bloom Investments, LLC, where her passion is to help people execute passive income real estate strategies as a means to provide opportunities for financial freedom. Now, the Northern California-based Legacy Bloom Investments is a privately held real estate investment company with a focus on investing in U.S. commercial real estate and multifamily communities through private placement. The company offers investment opportunities for accredited and sophisticated investors who seek to improve their returns on their investments or even to create more diversity in their portfolio. Sara joins us today to niche down a little further in the multifamily investment space and specifically senior care living facilities. Sara, welcome to the show.
Thanks, Rick, for having me.
Absolutely. Now, we should say, obviously, you are a return guest on the podcast, and you joined us last year talking about other multifamily investment properties, specifically apartment buildings, right?
That's right.
So today we're going to learn about another space within that niche in senior care living. But before we go there, let's make sure, again, that we have for our listeners, some common understanding of a couple of terms that I specifically used in your introduction there. Help us first understand what is meant by multi-unit commercial properties.
Sure. So by the way, thanks for having me on again.
Of course.
So multifamily commercial, basically all that means it's just it's a real estate property that has more than 5 units, and units being homes or dwellings for somebody to live in. And so it can be anywhere from 5 up to 500 units or even 1,000 units in some cases. And so that anything over that number is considered commercial, falls into the commercial category.
And what about passive income real estate strategies? How do we define that, or what does that mean?
Well, in my world, passive income strategy is basically where we look for a commercial investment opportunity, and we place investors into that opportunity as through what they call a private placement, and that process is done through a syndication, which is a legal process of being able to put the investors together to come up with the capital to fund that project. And then the passive income comes from the investors getting the share of the cash flow that project yields. And so those cash flow returns can come quarterly or monthly. And then they also get a share or split of the profit of equity when the deal sells, typically, which is within about 5 to 6 years.
And your role in all this is putting these syndications together, right?
That's correct. So what I do is I go out and I vet out and I look for opportunities in the commercial real estate space, typically in apartments, multifamily. I've even looked at mobile home parks. And what I do is I bring these opportunities to investors together, and I do the research, I do the analysis. I actually go out and visit the properties themselves. I do all the due diligence, and I partner with very experienced operators who are very knowledgeable and have a lot of experience and track record in managing these types of projects.
And I should, just throw in there that I've seen the analysis that you do on these investment opportunities, and just the amount of information is incredible. So I can definitely testify as to the amount of work that you put into this. And that's important because these are big investments for people, right?
Absolutely. They're huge investments for most people, and it's sometimes in some cases it's somebody's full 401k or their retirement savings. And so anytime that we look at any type of project or deal that we're bringing to the table, we look at from the operator's experience, track record, the analysis of the returns. We look at how playing worst case scenario, with COVID, even how things like COVID. Unfortunately, COVID's unprecedented, but things that could happen that can impact the cash flow and the returns on that project. We look at the transparency of the management team, and again, the overall deal in itself, if it's going to be a good deal and if it's going to bring good returns to our investors.
Yeah. So I mentioned in your introduction that you offer these investment opportunities for accredited and sophisticated investors. Can you talk about those categories a little bit? What puts somebody into either one of those categories?
So anytime we do these private placements, these are regulated by SEC. And so there's basically two categories of private placements we can do. We can do what they call a 506C. That's what they call being offered under as an accredited status, or a 506B, which is what SEC calls as a sophisticated status or a sophisticated investor. Accredited just means that for various purposes, that deal, the investor needs to be accredited, which means they need to make $200,000 annually or $300,000 annually with their spouse, or they need to have a net worth of at least $1 million, not including their home. And then the sophisticated investor, what that means is that's based on a pre-existing relationship that we may have with the investor. And they may not meet the accredited status, but they have invested before, they are financially savvy enough, and they understand what the risk is that they're getting into to make the investment. And so based on that relationship, we would consider them as a sophisticated with the savviness.
So these investment opportunities are not just like for the big boys, right? We're not talking about large corporate type investors. You can work with families.
Absolutely. You know, what I really love about my business is that I can actually bring these opportunities to just regular people that are working professionals, business owners, maybe they're in the medical profession. And, you know, they're not part of this big institutional investor picture. I mean, there's plenty of institutional investors out there. There's plenty of larger investors out there, and, you know, they can buy these projects all day long. But this is really opportunities for the working professional, somebody who has a family, somebody who's, you know, looking to build their retirement, to build passive income streams, and, you know, and they have that goal, you know, the next 10 or 20 years or less. And they're looking for opportunities, you know, to get better returns on their money.
Yeah, I think that's really important to understand, because this really is an opportunity for more people than they probably realize. So I'm glad that you shared that. And so with all this in mind, what does an ideal investor, an ideal client look like for you?
Well, the ideal investor is typically somebody, I would say, in their probably middle age, 40s, maybe to 50s, and they're a working professional or they're a business owner. And they typically, a lot of my investors have families, and they're concerned about expenses like college and retirement, and, you know, what their next move is in their career. And so it's typically somebody that has a retirement already started, or they have funds in the stock market, and they have, you know, a portfolio of assets already, whether it's mixed in stocks or real estate or in their 401k or IRAs, and they're looking for ways to improve the returns on those, or they're looking for ways to diversify and move around some other assets, maybe into a different type of asset. So that's typically who I work with, and it's usually, again, they're usually motivated by making the money that they already have work harder for them.
Yeah, makes sense. So how does the senior living care facility type of multifamily asset play into what you do?
Yeah, Rick, I mean, this is such an exciting asset class to talk about. And so I'm so excited to be able to share it with you. So senior living it's one of those, I mean, it's been around for a long time. And it's one of those industries that we're still in the early stages of where that's going to be going. So with the amount of baby boomers, you know, into this next 10, 20, 30 years that are going to be aging, the senior living industry and the opportunity for senior living housing specifically is tremendous.
Are we talking like nursing homes or what? There's a few different kinds out there. I know my father's 81 and we've looked into some of these options,
Sure.
But there are a few different types of senior living facilities, right?
Yeah, absolutely. So want to make the distinction, because when we say senior living, you're absolutely correct. There's actually several subtypes of senior living. Sometimes you think of senior living, you think of the 55 and older age-restricted communities, or even sometimes the age-restricted communities where you can, you know, you have a cluster of homes in a neighborhood. So, and that is the case. So you have your age-restricted communities. You also have what they call independent living communities. And that's where the senior is fairly independent, but they don't want to own their home. They don't want to pay all the maintenance and do all the caretaking of their home. And so they just really want to have a simple lifestyle, but they're very able to take care of themselves. And typically they're kind of like college campuses where you have a whole bunch of homes together, or kind of an environment where they all can socialize. They have social activities, community events, and things like that. Then you kind of move down the spectrum to where it's more needs-based services. So with senior living, there's actually two components. You have the real estate component, and then you have the service-based component. And this is where senior living is it starts to differentiate itself from multifamily. So you have what they call assisted living and memory care. And then at the end of that spectrum, you have nursing homes. Now, nursing homes is not an asset area that we focus on specifically. We focus more on assisted living and memory care, independent living type of assets. But the farther you go down the spectrum, the more expensive it gets. That's because of the need that's required for that resident. The more needs for care that they have, the more expensive it is. So from assisted living, you can also have these subsets called memory care, where memory care is a really growing phenomenon where the prevalence of dementia and Alzheimer's is going to be going through the roof. Yeah. Did you know that Alzheimer's is the 6th largest leading cause of death in the U.S.?
Did not.
Wow. It is absolutely amazing what the projection is. According to the CDC, the prevalence of Alzheimer's is projected to triple in the next couple decades. And so as mortality rates are expanding, right, so we're all living longer, the prevalence of these dementia-type related diseases are growing, unfortunately. So back to your question. So we have these various subsets of senior living, from age-restricted, independent, assisted memory care, and then nursing homes. And then you have what they call these kind of like larger care community facilities, where you have like a hybrid model, and you have like all of these subsets, but in the same community. So you might have independent living, assisted living, all together with memory care and nursing facilities all together on the same site. And that's actually a concept for what they call aging in place, so that you can have somebody move from one stage to another, and so that they're comfortable, so they don't have to have the stress of moving again.
Yeah, that makes perfect sense. So to be clear, which in those that you just described does Legacy Bloom focus on?
Yeah, so we focus on independent living, assisted living, and the memory care components under this umbrella. The independent living still has some needs. They have some, again, this is independent living. Maybe they just need help with laundry. Maybe they need help with errands. Maybe they need a ride. Just some real basic tasks, that can be done, for them. And then assisted living is somebody that needs more help with some of the daily tasks. For example, they might need help with making sure they take their medication, or meal preparation, or taking a bath, or some other task that they need to do throughout the day. And then memory care is typically, you'll find memory care a lot with assisted living, and because memory still has the assisted living need, but it also has the additional need of helping that person, because again, they have dementia. They need help with they need more intense help with their daily tasks. And so you have a component of skilled nursing that comes into play at that point, because then you're required to have a registered nurse on site. And typically you'll have a registered nurse, and then even CNAs, and then other professionally trained staff. So those are the areas that we focus on.
And why is now a good time, do you think, to invest in those types of senior living facilities?
Yeah, so I think that, again, senior living has been around for a long time. But when we look at the demographics of how the population is aging, this is really the opportunistic time to get in. So we have about over 45 million people are over age 65 group. And in about the next several decades, to about 2050, that number is going to be over 80 million people.
Wow.
Just in the next 10 years alone, we're going to add an additional 18 million people in that age group. One of the things that we found was that the baby boomers are starting, they're in their mid-70s now. So back in 2010, 2011, baby boomers started to turn 65. So now they're in their mid-70s, and the average age that a resident goes into senior living is about between 80 to 85 years old. The average age that a resident goes in for dementia or Alzheimer's is also about 85 years old. So when we look at the boomers are going to start turning 80 in the next 6 to 7 years, and they're going to be about 84, 85 in 10 years, and we look at the amount of supply of inventory that's out there for senior housing, we already know that there's going to be a shortage. And so that's why this is the time to get in, because you're getting in at the ground level, basically between now and the next 10 years when we're going to have this boom.
But I also know, Sara, and knowing you a little bit, I know that for you, there's more to it than an investment opportunity. I know that you care about what it is you're providing for the residents of these facilities, right?
Absolutely. With any of these types of commercial real estate deals, the reason I like multifamily, the reason that I like senior living, we're not just investing for ourselves and, putting our money in the stock market or, putting it into other asset classes. When we go into these types of asset classes, we're really contributing by helping the resident have a better quality of life. So with senior living, we're helping residents with their needs. These are needs that they have, not by choice. They're aging to an extent where they need to have help. And so being able to provide quality care and being able to invest in something like that, where we can in turn basically invest in the generation that brought us up or that helped us get to where we are. Now this is a chance that we can give back and reinvest back into them.
Yeah, I think that's really important. And that's what, for me, even just kind of hearing you say that, suddenly just kind of like hits a different spot inside, say, well, yes, I'm looking to invest money to better my portfolio or to, increase my my investments. But then when you think about the other side of that is that we're having a hand in providing housing for people, safe and clean housing. That really touches something different. So I love to hear that. You mentioned something about the stock market. Let's talk about these investment choices a little bit. How does somebody benefit from this type of investment? And why would they invest in the multifamily housing and senior care facilities versus, say, the stock market?
Well, everybody has their favorite, and some favorites are the stock market, and there's nothing wrong with that. The stock market, and what you're doing is you're investing in a share of a company that you have no control over. You don't have any control over their daily operations, their management, the decisions that are made. And so from that standpoint, you're really speculating what's going to happen of, if they make this decision, this one decision, will it turn their profits up X amount? And so stocks are, again, it's not downing stocks at all, but it is just an investment class where, again, you just don't have control. The great thing about commercial real estate is that you have that level of control. As the operator, you can control the decisions that you're making that are going to directly affect the type of income or rental income or business income that you can potentially get. And so you can make those decisions. And when you go in and as an investor into one of these projects, that there's just a level of control that is there. The other thing is that you have an investment into a physical asset. Instead of, investing in something that's somewhat fairly speculative, you're investing in something that has a brick and mortar component to it. So you can see it, you can touch it, it's there. One thing that was really interesting was when COVID started happening, I was thinking that, we had a number of investments in some of these syndications, and I actually got a call from an investor who was so thankful because right as she had invested in that deal and then COVID hit, the value of the real estate didn't change because the real estate's not being sold. So, the value of the stocks went down dramatically, but the value of real estate still was the same. Now, there is some, with some of the rent collections and things that are going on because of COVID, there's absolutely impact on that for sure. But, having the money in that type of a physical asset was protected her money way more than the money that would have been in her stocks or in her IRA or wherever it could have been. And she called me actually thanking me to actually thank me for that opportunity, because she didn't lose 20 or 30% of her portfolio.
Yeah, which I think a lot of people did. So that's something
true.
Definitely hit hard. What is the hold period for this type of investment? How does it work?
Yeah, so with senior living, it's very similar to multifamily. It's typically about 5 to 6 year hold. That's just the kind of the sweet spot for when the returns are maximized at that point. And that's also typically a popular timeline because of the depreciation schedule. So about 5 to 6 years is pretty common.
And how does an investor, you mentioned returns, how does an investor realize their returns in an investment in commercial real estate?
So the investor has a couple ways that you make money. The first way is you get a distribution of the cash flow that property is producing. So the cash flow, if you think of it as rental income or lease income or business services income, which senior living, by the way, has all of those components. That's why it's actually so attractive. You get a preferred rate of share from that deal into your account. So for example, if you're getting an 8% return, preferred return in some of our cases, we give preferred returns, you would get 8% interest on your money that would be paid out to you every quarter. And then the second part is when the property sells, you get a split of equity or profit from the proceeds of the sale. And so between the proceeds of the sale and between the sharing of the cash flow, which is the passive income source, that's where then your total, that's how we come up with our total returns.
How does an investor fund their investment in this? Is it all cash up front? Are there other ways? Are there IRA opportunities there?
Yeah, absolutely. So these types of investments actually can be made in a number of different ways. And I think that a lot of people are actually surprised that they can actually do it in different ways, except without having to have cash. But you can absolutely invest with cash. We have investors do that as well. But the majority of our investors actually fund from illiquid sources. So they do what they call self-directing IRAs. There's self-directing 401ks. And you can fund from an LLC, from a trust, from a 1031 exchange. And so there's all these various ways. But for the average investor, their 401k or IRA is probably the most popular.
Yeah, interesting. So that's a lot of great information. And look, I know I don't want to take up a whole lot of your time because you've got places to go. But before I let you go, I know you're familiar with the Proust Questionnaire because I think we played this game the last time you were on the show, right?
Yes.
So I'd like to play it again, but because I know you've played, I'm going to throw a couple of curveballs at you. You okay with that?
Uh-oh. Okay.
Again, pretty harmless questions, and it's called the Proust Questionnaire, by the way, because Marcel Proust, a French writer back in the early 1900s, he came up with this list of questions that he believed would reveal a person's true nature by answering these questions. And they're really like kind of simple questions, but they cause you to think a little bit. So first thing that pops to mind is generally the most honest and correct answer. All right, you ready?
Sure thing.
What is your ideal of perfect happiness?
Well, so perfect happiness, I believe, is being secure in yourself so that you can be your true, authentic self and showing that to the world. I think that regardless of what's going on around you, whatever crises and, things that could be tough or things that could be happening in someone's life, I think that having your core self and having the security of who you are, and that is, to me, that's where I personally find a lot of happiness.
What is your current state of mind?
Well, my current state of mind, I would say, I'm very hopeful. Even, despite of the corona pandemic and all the things that are going on, I'm very hopeful for the future. I know that, as they say, this too shall pass. And so just knowing that eventually things will come back around. It may take a while, but things do and will come back around. And so I'm very hopeful and looking forward to that.
I concur. What is the most generous act you've witnessed recently?
That's a curveball question because I haven't really been out much.
It's a tough one, right?
I would say the generous act is probably between my kids because that's who I interact with most of the time. It's just my kids actually just helping each other out. And my kids, they fight just like normal siblings. But there was a moment where my daughter was getting along with my son and she was helping him on some whatever issue it was. And it was, wow, it's like, okay, you guys can get along.
Proud mommy moment.
and she was so kind and helpful towards him. So I can say that's probably the most recent incident that I can think of.
That's an excellent response. What is giving you hope right now?
Well, giving me hope right now, I would say, Rick, well, hey, being on your show is great. Yes. Gives me a lot of hope. I would say, just the human spirit and, experiencing what people are going through or hearing about their experiences and seeing their experiences gives me a lot of hope about just the human spirit and, the human nature itself. Humans are very resilient, and it shows through this crisis. We're able to see a lot of resiliency come out through us.
Excellent response, especially the first part. You're a winner here. Excellent. Sara, please tell us how our listeners can find out more about Legacy Bloom LLC, about investing in the senior care facilities, and how you can help them overall with your multi-unit commercial investing. Yeah,
absolutely. So you can visit my website. It's at www.legacybloom.com.
Sara Jung, Acquisitions Manager for Property Investment and founding member at Legacy Bloom LLC. Thanks for joining us today. It's been great.
Thank you, Rick.
And that'll do it for this episode of the Business Innovators Radio Podcast. I'm your host, Rick Brown. Until next time, keep innovating.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.